Good day, ladies and gentlemen. This is Barry Norman on behalf of Investor.com, and welcome to our brief Sunday afternoon webinar. I hope everybody's having a delightful day. Now, today we have people coming from all over the world. So as I'm getting ready to get the webinar started, I'd appreciate it if you could just type in and let me know what part of the world you're from, what country, what region, what state, what city, anything that'll give me a clue, because I'm always just curious where everybody's coming from. And we'll be getting started the webinar we'll get it started right now, actually. Oh, I see everywhere. I see a couple Londons. I see a Qatar. I see South Africa. I see London. I see Paris. I see Kuala Lumpur, China. Well, all over the place. South Africa, Australia, welcome. I was watching the boxing matches from Brisbane this morning. All right, today we're going to be talking about Bitcoin and Ethereum. Now, before we can really understand what is going on, we have to understand what cryptocurrency is. And I will tell you something straight up. I don't really get it. Okay. I can't account for how to trade cryptocurrencies. I understand what they are. I understand why they should work. But let's start with defining them. Today, cryptocurrencies have become a global phenomenon known to most people. You know, a couple of years ago, you'd say the word Bitcoin, people had no idea what you're talking about. Today, it's a pretty well-known concept anyway. While still somehow geeky and not understood by most people, banks, governments, and many companies are aware of its importance. In 2016, you'll have a hard time finding a major bank, an accounting firm, or a prominent software company or government that did not research cryptocurrencies, publish a paper about it, or start a so-called blockchain. And in 2017, it's getting even more mainstream. But it's not the currency itself. It is the blockchain or the process of these payments. Now, this is where it starts to get muddied. The water starts to get muddied. If you take away the noise from cryptocurrencies and reduce it to a simple definition, you will find it to be just limited entries in a database no one can change without fulfilling specific conditions. This may seem ordinary, but believe it or not, this is exactly how you define a currency. Take the money on your bank account. What is it more than entries in a database that only be changed under certain circumstances? This is currency. You can even take physical coins and notes. Take what they are limited entries in a public physical database. They can only be changed if you match the conditions that you physically own the coins or the notes. Money is all about a verified entry in some kind of database of accounts, balances, and transactions. Now, if we look at it in current spendable money, the cash you have in pocket, this is the money that floats around the economy in all different kinds. But all the other money outside that little bits of cash are in accounts somewhere, somehow, some way. And they're only moved by a set of entries. Technically, when you hear about, something happening to $1 billion, there's nobody carrying $1 billion from one bank to another. It's all a set of entries. And blockchain, which was developed with Bitcoin, gives us one of the most advanced, safest ways to make these entries. Okay. So let's have a look at the mechanism ruling the database of cryptocurrencies. A cryptocurrency like Bitcoin consists of a network of peers. Every peer has a record of the complete history of all transactions and thus of the balance of every account. It is public, but what isn't public is the ownership of those accounts and how to move the funds. So you have an address. Okay. And if I want to pay you $1 million, I have to do something on my side via my login to send that $1 million to you, and it goes through this blockchain process and is then moved to you without any physical movement at all. So a transaction is a file that says Bob gave X Bitcoins to Alice and is signed with Bob's private key. It's basic public key cryptography. Nothing special to it all. except it doesn't have a name to it. And that's what bothers most of the banks. It is anonymous. The name you have is an address that is not necessarily tied back to you and identified to you. Okay. So it is something sent from one peer to another. This is basic P2P technology. Nothing special about it. Now, it is the blockchain technology, though, that is or was what made Bitcoin critical or important. And this is the value of it. All the time you hear about people talking about blockchain, this was the technology of developed with Bitcoin to move these coins. So someone requests a transaction. That requested transaction is broadcast to the P2P, the peer-to-peer networking consists of computers known as nodes. Then the network of nodes validates the transaction and the user status using a known algorithm. A verified transaction can involve cryptocurrency, contracts, records, or other information. This time, because we're talking about Bitcoin, that's what's being moved. Okay. Then, once the algorithm approves the file movement, a new block is then entered as in the existing blockchain. In that, it becomes the permanent and unalterable, and then the transaction is complete. And all of these activities, okay, are publicly available. So in other words, if you go to your bank and you make a transaction, you move it from one account holder to another account holder in that bank, the bank does something in their computer and internally it's done in a couple of seconds. But there are no public records of it except within the bank. And it's not published, so it's hidden, it's not transparent. But then all of our bank accounts have to be tied back to identification numbers and names. So we could see that Bill sent Alice $2,000. But if address 12749766423 sent 127545554, that same $2,000, nobody could identify it because nobody knows who that address belongs to on either side. So cryptocurrency is a medium of exchange created and stored electronically in the blockchain using encryption techniques to control the creation of monetary units and to verify the transfer of funds. Bitcoin is the best known example. Okay. Now, the transaction is almost immediately known by the whole network, but only a specific amount of time it gets confirmed. So if you've ever seen one of those, I mean, we used to have them when I was a kid in the 5 and dime stores. They used to have these little games that had all these little pegs in it. And you would drop a coin in it, it would come all the way down. And if it hit the 5-cent thing, you got 5 cents back. You actually see it on one of the big game shows now, they have it. And you drop the ball down and it hits all these coins and it bounces. And at the bottom, if it hits $1,000, you get $1,000. Well, imagine at the top was your address and at the bottom was the final person's address. It bounced all around there, but everybody could see it all bouncing around, and they just don't know the recipient of the end. So you can see these billion transactions, and the thing is that these billion transactions always equal the amount of Bitcoins in circulation. Okay. So confirmation is a critical concept in cryptocurrency. You could say cryptocurrencies are all about confirmation. As long as a transaction is unconfirmed, it is pending and can be forged. When a transaction is confirmed, it is set in stone. So in other words, Bill went on to his Bitcoin account online and told his account to send $2,000 or say 1 Bitcoin to Alice. Okay, but he didn't send it. He sent it to 12379, 1 Bitcoin, and it goes to 12749. It goes through this Bitcoin, and it gets tumbled and tumbled and tumbled and tumbled and tumbled and tumbled until those computer nodes find that 1274963, which belonged to Alice, and it drops it out, that little building block, out into where that one address is, and it gets put into then Alice's account. And it's just dropped in there. Sounds like a toy. And then once it drops out of this little funnel into Alice's, to the place where Alice's account is, it becomes a confirmed transaction, and it's, that last little block shovels it into Alice's account. But we don't know it's Alice's account. So as long as the transaction is unconfirmed, it can be forged. When a transaction is confirmed, it is set in stone. It no longer is forgeable, and it can't be reversed. It is part of an immutable record of historical transactions, or the so-called blockchain. Only miners can confirm transactions. This is their job in the cryptocurrency network. They take transactions, stamp them as legit, and then spread them in the network. After a transaction is confirmed by a miner, every node has to add it to its database. It has become part of the blockchain. Okay, now I can, on some concepts, understand this, but it still confused the hell out of me. So I opened up 3 completely different types of Bitcoin accounts. Okay, I learned that it cost me a great deal of money to exchange or move Bitcoins. It's virtually impossible to use them anywhere to make much of an impact. And 3, their value goes up and down, and so does their purchasing power. Okay, all of you people ask about miners. We're not here today to discuss miners. If you want to, know a detailed explanation of how Bitcoin actually works and what's involved in all the costs in the process, you need to go online, because we're more concerned today about using Bitcoin and then investing and trading Bitcoin, not in the functionality of Bitcoin and who makes what. Okay. Now, personally, I see no future for these type of currencies. Okay, and I know everybody's out there yelling, you're crazy. I don't think they'll ever go mainstream, but their technology is a different story. The technology of Bitcoin will go everywhere. But the fact is, we're in our society, no matter where we live, we're too geared to cash and credit cards. We're used to walking in a store and handing cash or a credit card that's swiped. I mean, it's still difficult to get somebody to use a QR code on your phone to take payment. All of this is a little bit too advanced. If you remember, a couple years ago, Starbucks started that thing where you could actually walk in and just swipe your phone in front of their cash register. Most of that didn't take off, but it was still money that we could understand. You can use Bitcoin to some degree online, but there's very few places you can walk in the door and buy something with Bitcoin. Because since you can't carry them, it involves a transaction. Okay. The thing about using your credit card is they're almost instantaneous, where a Bitcoin transaction isn't almost instantaneous. It takes a little bit of time for that process to go through and the confirmation. This is what I see as one of the biggest drawbacks. Because if I went into Starbucks and swiped my Bitcoin thing of it, and I'm sitting there 5 minutes later waiting for the cashier to get a confirmation that appeared in her account, well, that gets a little bit too much. Now, the fact is that Visa and MasterCard conquered this a billion years ago. Because you remember, right, I remember 30 years ago, 40 years ago, when you used a credit card, you had to wait for them to call up. First of all, they gave most credit cards under $25 purchases automatic approval. Then after that, they had to call on a telephone. You just stand there while they call on the telephone. They'd have to talk to a human being. They'd call, but it went still fairly quickly. But all the stores were set up for this. Okay. Then after that, you went and they keyed everything in on a telephone, but they didn't talk to a human being unless there was a problem. Then we got to the point where you had a scanner right next to your computer. But then today it's just bing, 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 boom, because the technology is there. Bitcoin doesn't have, not that they're not technological, they're not set up for the mass retail. And the idea of Bitcoin doesn't work, the blockchain doesn't work fast enough. The second thing is the amount of transactions to the cost, because they try to push and tell you that there's virtually no costs. There are a huge cost. Okay. I mean, they're being adapted more and more. I got an email from Wirex, WIREX.app. They were one of the places I opened a Bitcoin account. Tell me now, there's a Bitcoin transaction fee. It's a small little amount of money, but that will be added to each of my accounts. Plus, each one of these places have to fund themselves, so they charge me so much. Then if you want to move your Bitcoins into reality to actually use, and you want to convert them to your PayPal account, you want to put them on the US dollar, you want to move them to your credit, the fees are astronomical. They add up to over 10%. So that's the problem. Now, everybody was screaming years ago, or when they started, about money laundering and secret accounts. In fact, is, well, you know what? If I had $10 million in Bitcoin, how do I get it back into cash in my account? Now, if I'm using a big broker to trade with, then I've got a known account. But you can't have one convict paying, if he's got $50,000 or $100,000 and he needs to move it across the world as a cocaine dealer, he's got to go somewhere and buy that many Bitcoins. So yes, he could go to somebody else who's buying them in cash, buy them in cash, get the transaction, get it in there. But that person with the cash still has to be tied back to something somewhere. So let me tell you, it's impossible to get Bitcoins without exchanging money through a Bitcoin exchange. This is awkward and it needs verification. If you get paid in Bitcoin, okay, you have it. Now how do you use it? So this is one of the things is I operate my school website, and there people can pay to come to class or buy my books. So I said, let me try accepting Bitcoin. Excuse me. And I did. One or two odd, and then people paid in Bitcoin. Okay, the transaction was fine, but now I've got Bitcoin. So I've now got 3 Bitcoins in my account or my wallet from people who have paid me. What am I going to do with them? How do I move them? I can move them in Bitcoin, but how do I use them to buy anything? Can't go on my PayPal account and use them. Now, the fact is, there are some stores that tried to promote to the geeks and start accepting, like Overstock.com in the US accepts them, Expedia accepts them, WordPress accepts them. But the fact is, I got very, very lucky in this whole mess while I was experimenting with it, because I only invested a couple $100 through the systems. But when I would leave them sit there, because I was trying to see what would happen and watch the news. I wasn't investing. I was trying to see how they would move through the system. Bitcoin happened to soar from $700 to over $2,000. So my little Bitcoin sitting in my little Bitcoin wallet were now worth $6,000 US instead of $2,100 US. Okay, nice, got lucky. But how would you like to do Bitcoin on the other side of the foot? If your employer was paying you a Bitcoin and he paid you, Bitcoin is worth $2,000 today, and he paid you 3 Bitcoins, and put them into your Bitcoin account, and next month when you went to pay your rent the first of the month and you wanted to use your Bitcoins, you found Bitcoin went from $2,000 a Bitcoin to $1,000 a Bitcoin, so you only have $3,000 instead of $6,000. Because it doesn't happen with currency. It doesn't happen with your bank account. If you put $10,000 in your bank, let's forget theft. If you put $10,000 in your bank account and your boss transfers $6,000 in there for your pay, you don't have to do anything. And next month when you want to go pay your rent, your $6,000 is still there. You pay your $3,000 in rent. Now, yes, currencies go up and down in value, but since currencies are issued by the government in which you live in, or the country in which you live in, most things don't get affected that way. You can still go buy the same groceries. Your dollar isn't less. You can still pay the same bill. Your landlord says, I gave you a lease for $2,000 a month. I want $2,000 a month. Okay, not the dollar went up and down in value, because it doesn't happen that way. Okay, so wrap your head around the fundamental concept of cryptocurrency can be a challenge. One explanation works for some people and different explanations work for the other. But we have to talk about investing in these. Okay, and that's where it gets really difficult. Now, they offer a whole bunch of things. And if you were looking at a company, like you were looking at Uber, and you saw it had incredibly great advanced technology, it was gaining in popularity. Or we take Facebook. Let's take Facebook. They had this unique technology. They were gaining in popularity. All the factors were positive for growth. Their price soared. So Bitcoin and blockchain technology the technology is the thing of the future. Blockchain technology, the distributed ledger system that underpins the digital currency, is getting a lot of attention from Wall Street. With uses ranging from cross-border payments to settlements and clearing over-the-counter derivatives to streamlining back-office process, the potential of disruption in the financial industry and elsewhere is growing more real each day. While Bitcoin is the most widely used and well-known use case of Bitcoin, Ethereum may be the killer app that allows for distribution or disruption to finally take place. What's happened is new, faster, more advanced technical cryptocurrencies are coming on the market. There's now several of them fighting for Bitcoins. Bitcoin made it popular. It's like Uber. Uber became very popular. It became the thing for taxi ride sharing. All of a sudden, it's followed by Get Taxi, Taxi this, Taxi that, with lots of competitors. Now, if the new competitor comes out and is able to gain popularity or has more advanced technology, it has a problem for those competitors. If you look at AOL back in the beginning days of internet, well, where are they with Facebook and Twitter and everybody overrunning them with new technologies? Now, what Bitcoin did for money and payments by harnessing blockchain technology, Ethereum may do this for applications of all shapes and sizes. With a built-in scripting language and a distributed virtual machine, smart contracts can be built to carry out all sorts of functions without the need for a trusted third party or a centralized authority. Using its internal cryptocurrency, Ether nodes can be paid for the processing power in running these decentralized apps. And eventually, entire decentralized autonomous organizations may exist in Ether economy. The potential is exciting, and the price of Ether, or Ethereum, has recently risen to over $10, giving Ethereum, as implied, a nearly $800 million in value in just a few years. Again, if we think of these as individual businesses and market share, they make sense. But when you think of them when you're investing in Bitcoin, you're not investing in Bitcoin's value as a company. You're investing in what you think this currency is against another currency. So this is where it gets complicated. And unfortunately, this is where too many people get suckered in. A colleague published a great video just recently where she tried to live a week on the currency, and it wasn't easy. You can use Bitcoin online and in some retailers, but for the most part, you're still better off just paying cash or with a credit card. You should also be aware that Bitcoin is more like a speculative investment, and this is it. Not Bitcoin itself, buying and selling or buying things with Bitcoin. It is the investing in Bitcoin that it's become too big of a speculative investment with wild fluctuations for people to use it as a currency. If you were a kid and you were saving all year long to buy your scooter, and when you looked at it in the beginning of the year it was $2,000, and it's still $2,000 right now, and you would put all your money in Bitcoin, and you keep putting in there, and you had your Bitcoin, and you were going over to buy that scooter, and when you wake up this morning, Bitcoin's only $700. You did all the same work, you put all the same money away, but you only have a $700 value. And this is where the problem in investing in Bitcoin, not using Bitcoin as a currency and the inception of Bitcoin, but speculators have destroyed this possibility because currency has to have a value. So remember, although the overall trend has been up in recent months, There have been crashes of 20% more in a few days, and historically are not uncommon because there is no value to Bitcoin. So a researcher and billionaire, almost 2 months ago, hedge fund billionaire Michael Novogratz made a bold announcement. He put 10% of his net worth into digital currencies, including Bitcoin and Ethereum. Now, a lot can happen in a couple months. Specifically, the price of Bitcoin has more than doubled, and Ethereum has increased 6 times. So he made a smart investment. But this was a long-term investment that he put a huge amount of money in that he could just sit and wait for the market to go up and sell it when it was up. So if you buy gold at the bottom and you can sit tight till there's a reason for gold to skyrocket, you can sell it. But the thing is, he did this, number one, through a broker. So that means he's got to pay tax on it when he verses it back. And he could wait out, because when you're a billionaire, you can wait out a couple $1 million. So around the same time, cryptocurrencies reached all-time highs earlier in June, with Bitcoin hitting $3,000 and Ethereum breaking $400 the following day. Novogratz thought that the current crypto boom had topped out. He sold a bunch of his digital coins. He was very smart. Hey, now, because everybody's trying to convince everybody that investing in Bitcoin, let's take it back, trading in Bitcoin can be very profitable and successful. They've even developed Bitcoin volatility meters. Like we have the VIX for the Wall Street, the volatility index. Now we have one for cryptocurrencies. But the fact is, there is no value and no rational reason a cryptocurrency goes up and down in value. There's no reason it whipsaws. This is what traders can't get in their minds. Okay. Cryptocurrency traders become accustomed to their price violently whipsawing up and down in waves. A 30% drop in Bitcoin in May preceded its recent peaks by about 2 weeks, but the current downdraft appears more sustained. Although the cryptocurrency rooted in a technology system known as blockchain have each since recovered some of their losses, they have yet to come anywhere near close to their recent highs. Although Bitcoin is trading at $2,400 against the US dollar. But again, you need to have liquidity, and that's the other thing, because unless you're trading with a broker, okay, and you still have a problem, is the volatility and the liquidity. When the exchanges go down, like and then there's all the criminal activity. Because if you're investing in Bitcoin with a broker, it's one thing. If you're buying Bitcoins to leave in a blockchain or to leave in a Bitcoin wallet to go up, it's different. But when you're investing with a broker, you need some type of rationale to understand it's going to go, where it's going to make profit. Or you need to be able to cover the swings of the marketplace and the volatility, because the dealer is not going to cover you. So therefore, you have to have, it could be up to 30% to cover your stop losses. How do you know where to put a stop loss or where to put a take profit, where to enter the market and where to exit the market? For comparison, the volatility of gold averages about 1.2%, while major currencies only move to 0.5% to 1%. A 1% move in a currency is huge. Now, we can see that if we look at Bitcoin's milestones, we can see these sudden climbs. But remember, for everything that goes up, it comes down. And the fact is, where do you put a value on Bitcoin? For something for something to be an effective currency, it has to have value. The US dollar used to represent actual gold. Remember, back in the old days, $1 was equal to so much gold, and that gold was stored in Fort Knox. We've gone away from the gold standard, but it was all based on that. The dollar was scarce and required work to mine and refine. So the scarcity and the work gave gold value. This, in turn, gave the value to the US dollar, because for every dollar, the US dollars were notes, and each one of those dollars was backed by the equivalent in gold. And they didn't have moves. And when you're on the upside of a move, it's very easy to see all the good points. It's when you're on the downside or the upside is going and you want to leave that move, you want to take your profit and you can't get out because there's lack of liquidity in the markets. So in cryptocurrency coins, which are nothing more but then publicly agreed on records and ownership, are generated and produced by miners. These miners are people who run programs on specialized hardware. Now, last Sunday was a perfect example. A message board posted a message about, and I can't even say his name is Russian, but his name is Buterin. Okay, he was the founder of Ethereum and said he was killed in a car crash. The news of this sent Ethereum falling 20% or wiped out $4 billion in value in minutes, and it wasn't even true. The hoax not only drew attention to Ethereum, the second largest digital currency after Bitcoin, which had seen its rise 50-fold since the start of the year to $300 a coin. Okay. It did bounce back the next day. Now, Andrew Levin, professor of economics at Dartmouth and co-author of the study on central banks' digital currency, said that the concept of private institutions creating a new form of payment was not in itself new, but the greater need is for consumers and businesses to have access to money that has a stable value and is particularly costless to use. We think there's a strong case for digital banks to issue digital currencies that would be free to use. Okay. It is a booming, dizzying market. Since the start of the year, Bitcoin, the world's biggest crypto coin, has almost tripled in value to trade about $25.65. But some estimates the cryptocurrency business could be worth $5 trillion in 2022. There are now 800 cryptocurrencies in total, all worth about $96 billion. Okay. Now, why is it so popular? Bitcoin, the popular cryptocurrency price, has been constantly an upward trend until just the end of last week. Now, why? It's because they've done a really good job with press and headlines. They've buried all the headlines with the bad things, with Mt. Gov going broke for millions of dollars and people losing thousands of Bitcoins. And at the same time, they've looked at it more as a trading instrument. And because it's gained in popularity, because there's been lots of headlines, lots of press, and lots of talk about it, and blockchain technology stays in the press continuously, that everybody sees it as a potential for making money. So when things are going up and they're reaching headlines, it gains in popularity. So the growing Bitcoin trend has caused concern to many investors, confused about whether to invest in the cryptocurrency now or wait until the next price fall. The past 24-hour market trend seems to address their concerns thanks to over 22% drop in the value. However, the situation is not expected to continue for long to increase adoption and stability of the cryptocurrency. Now, if we look at a chart over here, we can see where price surged all the way up here just the other day and then fell back down on the end of we're in July now, so the end of last month. But it's still way above where all of these people entered it months ago. So like he said, if you had bought gold in 1975 for $300 and it's trading today about $12.50, you think you did wonderful. Same thing with this. But it's not for trading is the problem. Meanwhile, cryptocurrency and investment experts believe that the recently witnessed price rally is just the beginning, and this time there is no need to draw similarities between the tech bubbles and the Bitcoin bubble. Okay. Again, the media outlets are trying to get you in. They're printing stuff. According to reports published on media outlets, the cryptocurrency has reached a stage where it will play a significant role in stability and in integrity of the distributed ledger solution. This has resulted in increased demand for Bitcoins and other cryptocurrencies, not only among traders and community members, but also businesses involved in development and implementation. Now, the one advantage is cryptocurrencies are like gold. You have to mine them. There is a limited supply. So if there's a limited supply, the more people that want them, the higher the value can go. But again, when things are not attached to any type of valuation system, they don't respond to geopolitical crisis. They don't respond to inflation. They don't respond to headline news. They don't respond to war. Okay. How do you come up with a value? How do you decide to trade them? Speculate, because that's what's happening. Speculation is what is riding. If the speculators were not in this market, Bitcoin could have a future as a cryptocurrency. But again, would you use it as a currency that you can't be sure of its value or what you can pay for? If you put it away for your retirement and it's worthless, if you put your dollars, your euros, your pounds away for retirement and the pound tumbled, okay, well, so did the prices in the UK. So you still most likely have the same buying power at home, okay? Because if your rent was £2,000 and you still have £2,000 in the bank, you can pay your rent. Doesn't matter. It's only worth $1.29 instead of $1.89. Doesn't make a difference to you. Okay. Also remember, Bitcoin is not regulated. There's no guarantees. There's no government body monitoring it. There's no insurance. Okay. And there's been too many red flags. So let's go over and let's take a look at some charts. And let's take a look at what's really trading on Bitcoin. And let's take a look at, hold on a second, let me just pop them up on your screen. Let's talk about trading in Bitcoin. Okay. So on the screen in front of you, as soon as it pops up, we're looking at a current 30-minute chart on Bitcoin. Now we can see on Bitcoin against the US dollar, it was trading up here, which was the more recent high. And it's dropped, but not tremendously. It's dropped down here from the 27s down here to the 24s. Well, if you had a Bitcoin and you had to go pay your rent and you had to pay $2,700 in rent, and now your Bitcoin is only worth $2,434, you need to come up with $300 more. And this is the difference in, again, that I'm going to put in currency. But most likely you bought your Bitcoins down here and you've rode it up. So then you're happy anyway. But let's take a look at some, and these are not my analysis because I don't trade Bitcoin at all. Okay. Now here we have one trader that he's come up with a system to trade and evaluate Bitcoin. The fact is, I don't know how any system will work, because even if you're using volume, you're using momentum indicators, there's no guarantee that that momentum is going to continue on Monday or Tuesday. But as a speculative investment, for all the reasons, why don't you trade Bitcoin? I'm telling you, because there's no basis that I can analyze a market, because I don't have a starting point. I don't have anything that's going to affect it. I don't even have a comparison. So why I can't understand why Bitcoin soared from $700 to $2,100. Makes no sense to me. Okay. It's a guess. Okay. When there's nothing that ties back, when there is no analysis, if you're looking at the analysis of a stock or a company or its share values, or you're looking at Uber that hasn't gone public yet, and what you can look at is total sales, you can look at its turnover, you can look at its growth in employees, its growth in market share, you can look at brand recognition. I can't do that with Bitcoin. All it is sentiment. All it is, well, this guy who bought $100 million worth, or tomorrow the Bobsey twins, I forget their names, the ones that were partners with Facebook, come out and they're pushing because they want to build their own hedge fund for cryptocurrencies. They get some press tomorrow, maybe because everybody's on 4th of July holiday, so the press is quiet, so they get some headlines tomorrow. Bitcoin surges 300. How do I know this? How do I analyze this? Okay. So it's very important to understand this. So then we have another analyst who, now he's using a very simple method, and he sees, and this is, if I was looking at any known asset, and I saw the development of a chart pattern, which is a triangle, and I've got it into the center of the triangle, I'm now looking for a breakout to break up or a breakout to break down. Now, I would then say when it broke out, it should go and have the momentum going this way or that way. I have no idea what to expect with Bitcoin because it doesn't function in a rational manner. But if I was a trader of Bitcoin, if I'm a trader and I'm looking at this triangle, I mean, I'm ready for a breakout or a breakdown, a break up or a breakdown, and ready to trade that asset. You know, my candlesticks are giving me perfect, you know, everything is aligned here perfectly. I have my moving averages. I have a perfect formation of triangle. So what would I look at? So if we're looking at one-day Bitcoin, it's got a breakout. I would say go trade it, but not here. So somebody asks, is there a correlation between Bitcoin and any other commodity or currency? Not one, not one at all. That's the thing. Now, there are other cryptocurrencies, so when Bitcoin goes up, people think, the other crypto is almost like saying, you know, we see U.S. oil, crude oil source, so we expect Brent sea oil to move in tandem with it. But there's no production records, there's nothing. Okay. So again, we're talking about a difference between speculating and long-term investment. I would never buy anything at a top or near a top. So I wouldn't be looking at it. If I was looking at Bitcoin back down here when it was starting to move into an uptrend, I would have bought down here in the basis of an uptrend as a longer term investment. Okay. But you have to, if you're going to buy it, you have two ways to buy it. You can trade it through your broker, and therefore he's going to give you leverage, but you have to then afford the swing of the marketplace, and you have to know where to put your stop loss to take profit. And you're going to use leverage or margin most likely. Or you're going to buy the Bitcoins. If you're going to buy the Bitcoins, how are you going to get them? What are you going to do with them? And then how are you going to convert them back into dollars? Like I said, I got very lucky when I started this experiment and I was buying the Bitcoins and placing these accounts. They were $400 a piece. Bitcoin soared all that much. I made lots of extra money, not by investing, because I wasn't investing. I was trying to see how I could use Bitcoins and what I could do with them. Okay. I found most of it was not legitimate. I dealt with 3 fairly legitimate companies, but WireApp, they gave you credit cards to go with them, but they kept changing the rules, and they kept changing the fees and the charges to the point where it was costing you a ton of money every time you wanted to move your Bitcoin over to your debit card. And then they kept changing the balance levels on your debit cards. Then there was the Bitcoin wallet, which you can move them in and move them out from, but they don't do anything. They keep promising they're going to be adding on other things. And then there was the other one that was attached to PayPal, Visa, MasterCard, and whatever else. And you could move your Bitcoins. We had them move your Bitcoins into their own coin, which was an SLL. So you lost money there, and then move it over to dollars. And then you try to move it out to PayPal. And they said, oh, this is deemed by PayPal money laundering. You can't do this. It's like, how do I get money in there to move it to PayPal? So it was all... But so, you know, when you're investing in gold, you have a chance, you can buy spot gold. Spot gold has a value, and that underlying value of spot gold has an effect on what the value is, whether you're trading CFDs, you're trading ETFs, you're trading it in futures. When I don't have a value for my Bitcoin, and my Bitcoin value is really more or less based on the speculative value, but I don't have a way to turn it into liquidity, I'm then faced with only one alternative. If I'm going to invest in Bitcoin, I can only do it with a broker. Okay. And then we have, again, this is a longer term for Bitcoin over a 4-hour chart. And we see that actually Bitcoin, since it made its top, has been in a steady downward trend. Okay. So what everybody's trying to do is apply standard technical indicators as standard chart patterns to something that's new. And This is what happened back in the old days when like I said, you all know, 40 years ago I traded agricultures and as a day trader. Well, when the world changed and we got online Forex trading and then online stock trading, but then we moved to Forex and people were trying to adapt oscillators and indicators that were developed for the Forex market, and they hadn't been redeveloped or redefined for the new markets. They didn't work. And so now we have separate strategies and separate sets of definitions and separate sets of indicators that we know that work in Forex market but don't work in the stock market. We have different ways of reviewing values. Okay? And what happens is I don't know how we would look at value. See here, this is Euro US dollar. Okay? I can go on the Euro US dollar and I can go back historically, find support and resistance levels for the Euro US dollar and figure out what's going to happen, where a trader is going to bounce off of and sell, where he's going to buy back, where we should see hems and haws in the marketplace. This doesn't happen with Bitcoin. Okay. Japanese yen. Again, I can then drop on all types of indicators that I know work with the Japanese yen. I don't know what works because I can't even understand the market psychology behind Bitcoin and Ethereum. And I think that's what they're not mature enough to have that. So if you're going to buy or sell, it's for short-term investments to buy on bumps up and down. But I don't know how one could master that. And this is my personal opinion, but I don't know, I can't even tell you why Bitcoin surged from $700 to $3,000. Nobody can give me a reason. Okay, when gold surges up from $3,000, okay, even if I missed the whole move, after the fact, somebody can explain to me or give me reason, or I can see technical indicators that I missed. Okay, I can't see that. I can't see. Bitcoin is now jumped off, dipped off the 3,000. Can I drop Fibonacci levels on here, and will I see a retracement at 38.2? I don't know. So it's something to think about. What's going to happen in the short-term and near-term future? I don't know. I don't know what's going to happen with Ethereum, and I don't know what's going to happen with these other 800 types of coins out there. But before you decide to invest in Bitcoin or trade in Bitcoin, first go through the process I did. Go see if you just invest. Well, now when you're doing it, Bitcoin was worth a couple $100. It was a small investment. Okay, so once it becomes in the mainstream, so somebody just wrote this long comment in there about blockchain and Bitcoin. Blockchains is a marvelous technology. A cryptocurrency is not a bad technology. It's when speculation in that cryptocurrency or investing in that cryptocurrency starts to make it unusable for people who want to use that cryptocurrency for business purposes. Okay, and that's what takes out the technical concepts of how these cryptocurrencies work are great. Blockchain is phenomenal. Is a phenomenal transaction experience, and so is all the stuff developed by the Ethereum. It's the speculation and the investing in the interim. Okay, because again, my question is, well, no matter what country you're in, would you want the currency that you are dealing in? Like for instance, I can tell you when I owned a big manufacturing company for 30 years of my life, and we did huge amounts of business with China. China would only quote you product in US dollars, and didn't matter, they could care less about what the yuan was up, and they wanted letter of credit issued the day that they quoted you, because they didn't want to concern where the US dollar was up or down afterwards. They didn't want to hold on to Chinese yuans or renminbi, okay, because they wanted something that was stable. Why do you think crude oil is all quoted in dollars? Gold is all traded in dollars, because not dollar was so great. When all of this started out, people needed something that had value, that was tied to something. That when you have speculators in the middle of this cryptocurrency market who aren't using this to make any payments. They're just taking money in the interim. It's never, a bank's not going to pay or move money through, a cryptocurrency when the value is going to change instantaneously. So again, where the market matures to, and it might be in 10 years from now, we're all using cryptocurrencies. They probably won't be called Bitcoins or Ethereum or any of these other things because of all the changes and who comes up big. If you remember, we started out with Visa card, MasterCard, American Express. We had Diners Club. We had Discover card. I can't even imagine, and they all merged into one. We had VHS. We had VHS tapes and Sony Betamax. Okay. Somebody wins the battle. Okay. But when the battle's just starting, first we had to get enough VCRs in enough people's houses to make it, whether it's going to be a staple. Look at the failure of 8-track tapes. Okay, all the technology was there. Everybody, but it became passe faster than it could get out there. So you have to remember, we're in the baby steps. But when you have the speculation in the center, it to me is more detrimental for the long-term value of a cryptocurrency, because again, the speculators are trying. If you would want to use it for your form of business and you have speculators in there, again, think about it. Okay. So thank you very much. Have a great weekend, and we'll talk to you again real soon. Bye now.